The naira weakened at the official market last week, losing 1.25% to close at 1,536 naira 89 kobo per dollar on Friday. This is despite temporary midweek gains. Well, joining me for more on this, I have Oladipo Ajayi, Head of Fixed Income and Forex Chapel Hill Denham Securities. Thank you so much for joining me today.
Thank you very much, Perpetua, for having me on this morning.
Right. Before now, we saw some gains from even less than 1,500 naira. Now, Friday's closing at 1,536 naira 89 kobo at the official market. What would you say is responsible for this decline?
Well, we've been seeing more like a renewed demand in the market. Some of this demand could be attributed to foreign investors trying to actually outflow some of their funds. Don't forget that sometime last year, the central bank was very much aggressive in issuing automobiles, and some of the automobiles has matured, and we have seen some of these foreign guys trying to test the plumbing by actually moving their fund offshore, and that's one of the things, the reason why we are seeing more like a bit of pressure on FX on the official window. And aside that also, there has been all other genuine demand from manufacturers and other people that need FX for their businesses. And that's exactly what has actually put pressure on FX.
All right. We sort of note that this decline started even before the naira-for-crude conversation came to the fore. I'd like to get your thoughts on this. Does this sort of lend credence to thoughts in some quarters that the CBN's interventions may only provide temporary relief without structural reforms to sort of, if we do not have structural reforms to address Nigeria's, forex challenges?
Well, I think so too. I think I agree with you to a great extent. But however, we also need to understand that the central bank has been more like the highest supplier of FX from time immemorial. When you look back to those days of WDAS, RDAS, it simply means that on a weekly basis, we tend to see the central bank actually auctioning, doing more like auctions 2 times in a week for banks and also BDC to actually come to the window to actually buy FX so as to meet their needs. And but what the current government is doing is more like creating more like a window where you can actually go and access this FX. And so what the central bank will now do in turn is that actually go into that window to actually intervene when they see that there's a bit of pressure on the currency. And that's what we saw last week. The central bank was in the market Monday, Tuesday, Wednesday, and on Thursday. It was only on Friday that we didn't see the FX bank in the market to actually sell FX into the market. And last week, we noticed more like a total of about $230 million sale by the FX bank into the market. And we'll continue to see this happen because the federal government more like is currently more like the ISN of FX. And I think another way that we can also further relieve the central bank, the body, is to allow the IOC direct access into the MFM window, where the oil company can sell FX at their will directly to the end user. And one way or the other, what that would do is that it will further improve the level of liquidity we are seeing in the market.
All right. There really isn't a better time to talk about diversifying Nigeria's foreign exchange revenue and also reducing demand for the greenback on the other hand. So talk to us. How do we achieve this?
Well, this is more like a long-term plan. And why I said that is that diversifying our economy from oil has been a long story. And we've not seen a government that is more like very, very ready to actually do that. And and I think that the first point of call that comes to mind when you want to diversify an economy for like Nigeria, I think that the mining sector will come to fall for me. And I think the government is currently trying to actually do a lot in that segment of the economy. They've been trying to write policies that will actually further attract foreign investors into that segment of the market so as to help to improve the level of FX generating capacity of that segment. And also another one is agriculture, and I think we are not tapping more of what that segment of the market can actually bring to the table. So the government needs to actually work aggressively around this. This is a time for government to actually roll up the sleeve. It's not a time for us to continue to rely on what comes from the oil sector. And don't forget that whenever there's a drop in oil price in global market, that actually has such a time like that, we tend to see more like a bit of pressure on Nigerian naira, and we need to actually move past that time. And what we need to do is just to actually ensure that the economy is well diversified from oil.
All right, thank you so much. I'm afraid we have to end it here. Oladipo Ajayi, Head Fixed Income and Forex, Chapel Hill Denham Securities. Thank you for your time and your thoughts on the show today.
Thank you very much for having me on today.